Hello, everyone. Today, I'm happy to welcome Peng Li on the show of China Paradigm. Hello, Peng Li.
Hi, Matthieu. Thank you very much for inviting me.
Should I call you Peng?
Yes, of course.
It's okay. Good. So I'm very happy to welcome you because I knew you, I think, 4 or 5 years ago, and you were introduced to me as the person who sold a business more than $40 million and each restaurant being valued at $2 or $3 million. And I was amazed. I was amazed by how you could do that. You were working in finance at the time. You're still working in finance. It's been like 13 years you're working in finance. So you have a lot of insights of how to work in finance in China and how to value a company. And you have been now in another business, in a SaaS business, providing information about non-listed companies to investors. So it could be private companies, it could be corporations wanted to buy in China. And I've looked at your platform you showed to me. I mean, it's all in Chinese, so I couldn't read everything, but I looked at one company I saw everywhere, actually it was a coffee shop chain. And I was amazed by the information you provided because I didn't know they were so small actually. And I thought they were very big. I saw them everywhere. So it gave me a very good understanding how the brand equities they had, how powerful they were. So in this interview, I'd be interested for the audience to understand your software, how it works, and also the situation of M&A, how to value company in China, and so on. Thank you very much to be here.
Thank you, Matthieu, for the very detailed introduction. Just to make it short, my name is Peng Li to all your audience. I am a Chinese native and a French national. And you've been very flattering with your introduction, saying that I sold a company. Actually, that was when I was working as an investment banker at my previous firm called William Blair, which is a U.S. American investment bank. And that's when we sold a retail restaurant chain to another cross-border buyer. So I am a little bit familiar with this type of transactions. And so after 10 years, doing investment banking in London and then in China, I moved to the buy side and worked for a large Chinese investment company called Fosun. And then I also worked for as a strategy and business development person in Yum, China, which is a large. You probably you're a client yourself. They own the brands such as KFC and Pizza Hut. So now. I am on my own. I'm starting to work as a managing director and a partner for a business intelligence firm called MergerLink. And we're not similar to we're a little bit similar to investment banks, but we are more a business intelligence provider. So it is in the form of a SaaS, but the essence of our business and the value that we create is to basically generate and collect and structure proprietary information and intelligence. And we sell that information to private equity funds and investment banks and other MNCs who are doing investments in China.
So for everyone listening to us, SaaS is software as a service? Or
Correct.
Service as a software, sorry, service as a software.
Correct.
So it's basically providing service on a repeat business, monthly, billed monthly, and you get access to it by basically paying every month to the service. Could you give us an idea of the size? How it could be clients, could be revenues, could be number of people in your team, just an idea.
Sure. The as you just mentioned, we charge our clients on a not on a monthly basis, but on an annual basis, and we have around over 50 clients, institutional clients. So most of them are private equity funds. They are global USD private equity funds or Chinese venture capital funds. We also have MNCs, etc. So around 50 right now. So we only launched our SaaS platform for over a year. So the momentum has been pretty good. And in terms of staffing, we are around 20 people right now. So 3 partners. Plus, thank you very much. We try to continue to grow, and it's actually we have a very, very unique service offering, and because I think no one else, to my knowledge, no one else in China is doing this type of business. So in terms of size, we're still small, but we hope that we can change this industry by basically providing the services to all the private equity funds and all the investment banks, and hopefully most of the companies who are trying to invest in China in the future.
What's the difference between you, solution you're offering, like Metrolink is offering, and
Yes.
Wind, Bloomberg, Capital IQ, all those companies? Because I feel there are not a ton, but several software, several companies providing financial information. So could you explain us why those 50 clients chose your solution?
Absolutely, very good question. I think all the names you mentioned are great names in the industry. They are business business information or sort of a database provider for all the companies or investors, etc. But however, I think Wind and Bloomberg, they are mainly providing information on the secondary market, so stock market. So if you, Matthieu, yourself, you want to invest in some companies, or if you're an asset manager in an asset management company investing in the secondary market, then I think Bloomberg and Wind are great platforms. Capital IQ is more of a tool. You can go check and search potential private companies, etc. What we are the main difference between us and all those type of business is all these other type of names is that we are only focusing on the Chinese market, and secondly, we're only focusing on proprietary intelligence. So what it means is that we gather the intelligence we have in our platform. You cannot find it anywhere else, on Bloomberg, on Baidu, on Google, on Wind, or on Capital IQ. It's every single piece of information is proprietary. So, and that information is actionable by our clients. So basically, if our clients.
That means on your solution, I cannot get listed companies information, and I will get basically more middle-sized to small-sized companies that people don't cover in Wind, Bloomberg, Capital IQ, or even in the press. Am I correct?
You're partly correct. I think exactly. We only provide information that are not anywhere else, but we also have information about some listed companies. For example, we talk to them. We talk to the CEO of certain listed companies, and they will tell us what type of asset they would like to acquire in China or abroad. So that information is proprietary because it's in his head or it's in the policy of the company. So we get that information.
Okay, I saw you more as buy side, but actually you can be used as sell side as well.
Exactly, what can be used as sell side and buy side. So right now our entry point or our focus is on the investment in China, but we see more and more clients actually demands from companies from abroad asking us to find business partners or licenses for their brands or distributors for their brands, etc. So I think in 5 years, I think our business, we can evolve into a more of a business finder sort of, because we have access to the companies and we have a lot of those their information if they want to sell, if they want to buy, and what type of if they want to raise money, etc. So it's basically actionable intelligence and access to those firms, and we provide that intelligence to the companies, and then if our clients are interested in them, we make the connection basically between our clients and the company they are interested in. Okay.
What's the pricing of your software?
The pricing depends. So it's depending on two structures. On the upfront and the back end. So on the upfront, as a SaaS, we have a subscription fee. So on an annual basis, and if we make the connection, if the client see an interesting investment opportunity or an acquisition opportunity, we will connect them. And if we make the connection and they do the deal successfully, we will charge a referral fee or a finder fee. So it's basically a subscription fee and a financial sort of referral fee.
What's the cost of the subscription? Could you disclose
the cost depends. Again, it depends. So if some clients wants to pay lower, for example, referral fee, then the upfront fee is much higher. And if they can pay a much higher referral fee, then the upfront fee is lower. But again, we need to charge a subscription fee because we want to make sure our client is serious and they really want to do investment or acquisitions in China.
I see. So every client, you are going to have a different contract. You are going to kind of negotiate.
Correct.
And it depends.
Correct.
It may depend as well on how you feel about their ability to acquire. Yes.
Exactly.
Yeah.
So our clients are almost partners because when we talk to them, I asked the private equity fund, or I asked, what do you want to invest in? What kind of ideal investment do you want to do in China? What type of companies you want to acquire? And they will tell me, okay, I want to acquire in the most difficult sector possible with the lowest valuation possible. Then I will tell myself, okay, this is, it's maybe they will do one deal every 2 years or 3 years. Then we'll probably have a little bit higher upfront fee than so it's a balance between the two.
Okay.
Yeah.
So are you not afraid that they will connect directly the person in the article in the database? I mean, they could skip you, right?
Yeah, it's actually again a great question. We've been trying to test. Actually, we have almost 10 daily proprietary investment or acquisition opportunities per day. So on a daily basis. So we have we have clients from the venture side, so smaller business, smaller investment, to the buyout side, so large M&A and a much bigger deal size. That means that there are so many deals in China in the middle market with all different type of sectors. It's very hard for them to go and find the deals and the contact themselves. So if they want to do a really systematic approach and trying to find as many as potential deals possible, they can do it, but their efficiency is not that high because they have maybe 10 people on the ground. They are all very, very busy. They need to do other things than just sourcing deals or do cold calls or do market research. So they are a job. I mean, I was an investment banker myself, so we had to do a lot of advisory to the clients. We have to do a lot of presentation, internal discussion, valuation, and negotiation, and SPA drafting, etc. So all those takes a lot of time. And if you ask these people, to very highly qualified people and very smart people, to do searching companies in the Chinese middle market and do cold calls, and it's not as efficient use of their time. So what we are trying to be positioned is that we are a outsourced service for them, because the initial part of the investment process, which is sourcing deals, screening, looking for potential targets, finding the contact, and get connected, all those can be outsourced. And we believe that we are a business development tool as well, using business intelligence, so we can help them free up their time, empower their time, so empower them to do more things that are more value add, and which is actually what they're paid to do by their limited partners or they are investment banks or etc. So what we're trying to do is we are not afraid that they skip us. We actually welcome that, because if they do once and they do twice, they will know that we have more and more deals and more value, because they simply cannot go to every deal. It's too many, because we have thousands of deals a year. So that's literally, you need a huge team to do that.
When you say thousands of deals, you have thousands of companies you interview, or you have thousands of deals which are closed that you are seeing? It seems a lot like thousands.
Yeah, that's also a good question. It's actually a lot, and at the same time, it's not a lot, because when you look at the Chinese economy, the Chinese middle market is huge, and the Chinese middle market, contrary to the European or more developed countries, there is a lack of transparency, and there's a lack of information. Middle market, I would call it from anything, any revenue from $5 million to $500 million. I think
500.
Okay. $500 million. That's still middle market. And you're right to be surprised, but still in the US, middle market would be $10 million or $20 million to $1 billion. US dollar. So it's already much smaller than in the Western or more developed market, because the Chinese economy is still an emerging economy. So that middle market is huge, and there's a massive, very, very difficult, a massive problem for information. And people have some companies have 3 accounts. They have business activities that are opaque, and it's very difficult to find the real owner, etc. So all those type of problems and all those type of information, we try to resolve them and try to give clarity and basically access to our clients. So when you say 2,000, is actually not that much. I think in China we did statistics. There are around 30,000 to 40,000 companies, private companies, that have around 10 million of net income, RMB of net income. So you'll see it's not that much, but we have 2,000, 3,000 a year. So we need 3 years if we don't hire more consultants. We need 10 years to cover them all. So it's not that much. We believe that after 5 years, because we are growing as well in terms of employees, etc. After 5 years or 3 or maybe 4 years, we can cover all the Chinese middle market companies, and then I think it will make sense to open this SaaS platform to everyone, to yourself, to consultants, to lawyers, to every companies, basically, because we will have access to all the founders of those companies and the CEOs of those companies.
How do you screen the companies on your platform? Is it by size? Is it by sector? I guess size, sector. What are the criteria you are inputting in your platform?
Yes, I think it's a very question again. The way to find companies in our platform is basically 5 or 6 vectors. But you have 5 or 6 factors. You have size. You have their intention to sell. So if they don't have intention to sell, you will eliminate all those who are not willing to talk to you or to the private equity funds. You have, of course, their sector. That is very important. We have over 200 sectors that we cover, 2 niche sectors. So, for example, if we go into healthcare, we will have services, we will have pharma, we will have CRO, etc., etc. So we have many niche market. We will also have USD and RMB sort of currency, because some private companies prefer to raise fund with USD private equity funds, and some prefer to work with local investors. We also have, for example, forward-looking or currently doing the transaction. So it's basically all the features of the transaction. You can look through all of them, and there are many ways to find what you want in our platform.
Okay. Because I thought when I look at your platform, there was a kind of article where you have qualitative information, but you input the quantitative also in the screener with 6 criteria.
It's more than 6, but it's a 6 big criteria, 6 directions.
Okay.
Yeah.
Okay.
Correct.
I see.
And you're right. It's basically an article, but that article will have some information about their intention to sell, or to their intention to partner with what type of investors, their revenue, their profit, their business model, of course, products, etc., their shareholder structure, and their fundraising history, etc., etc. So it depends. Some have a very complete profile. Some have not as complete, because we have to interview. We get those information through interview and through basic interview with the top management or the real owner. So sometimes, if they have less motive to raise money, so they will tell you less of information, obviously. So it's not a fixed rule, but most of the time we can get a lot of the proprietary information without signing NDA, because our consultants, they are trained to get information and to especially to get those proprietary sort of non-public information.
So it's not only interview, right? You collect information, so you find on the web, you may
Correct.
find elsewhere, and you write a full article on this specific company, which actually can go in very, very different directions, right? Depending on the sector. You may talk about the locations, if it's a coffee shop company, you may talk about the quality of infrastructure, if it's a chemistry or production. So it can adjust to every kind of company.
Correct. Absolutely. The way we work is we have 30 to 40 databases or sources of information. Some are public, some are proprietary. Like for example, Dasio Consulting, we can also go to some very competent research companies. So we ask them, so we gather all those information, we structure them, and then we have an article. And then after we have all the information, we identify, of course, the owner, and we access them through our own connections, and then we get the final confirmation through an interview. So it is both an interview and a gathering of all the information from the various type of databases.
Okay. Since you started, do you have any
Yes.
client who already bought through service?
Yes, absolutely. So we have around now 50 clients, and a year to date. So since we launched our SaaS since September of 2017 last year, we've closed. We've received success fee on around seven transactions. So most of the transactions are done by private equity funds, those clients. So they basically read our news or intelligence. 7 transactions. That's correct. And they basically read our platform.
That's like.
Yeah, that's a lot more than
like
if
13,
I was a banker myself. Yeah, correct. It's
Okay.
actually very high, and we're trying to increase that success rate, because the more clients we have, the more we're gonna have closed deals. So basically, all those deals are, yeah. So all those deals, they go through our platform, they look at it, and they're like, wow, okay, I like this company, I like this sector, and then they ask us to connect them to this company who wants to raise money. So we connect them. They do the due diligence. They meet. They sign NDA. They negotiate, etc. And then they basically invest in the company. And then we get, as I mentioned before, the referral fee.
So once you have a client who is looking at a database, it's not. I mean, you don't leave him alone, right? You keep contacting with him because you may actually show up some opportunities, I don't know, on a monthly basis and so on, because you have an interest that it's happening, right?
Of course, absolutely.
You have a direct interest that something is happening. So you're not only providing information, and people, the clients are using it the way they want, or actually not using it in some cases. You're actually pushing them to look at some articles, some information. You may even adapt the search for them, so they can actually find the right target, because you have an aligned interest. At least you want them to close a deal.
Absolutely. We our incentive is to I was a banker. Our incentive is to make our client close deals, because they are all private equity funds or M&A department of MNCs, and their job is to close deals, because they have dry powder, and capital to invest, and they need to invest. Usually private equity funds have funds to invest for a certain period of time, and they need to invest in the best deals they can during that time frame. And so that's why we try to generate as much deal flow and as much deal intelligence for them on a daily basis. So around now we have around 10 per day. So you will find, once you're on our platform, you will find eventually the ideal deal. And the one advantage of our platform is that we don't need to. Most of the deals that are in our deals don't have financial advisors or investment bankers. So, for example, when I was selling this restaurant chain as an investment banker, it's already in the market, basically the asset, and I was basically selling it to many different private equity funds. We probably contacted over 100 funds or strategic buyers, etc. So all the market is it's an auction process. So for the buyer, there's less advantage, if it's an auction process, because at the end of the day, there's competitive friction, and the highest bidder will gain and get the asset. Here on our platform, because it's proprietary and only have 50 clients right now, and they're all looking for different type of deals, usually they look at a deal and they are the only investor or only potential interested party for that deal. And that is very, very interesting for them because that gives them more time for due diligence, more time to establish the relationship with the founder, and basically get the valuation, the entry valuation down. So that's a massive advantage they have using our platform.
Wait, I'm not sure I understand. Does it mean that if you have a client in the automotive industry, you would refuse the other ones in the automotive industry?
No, we don't. We usually right now it's for MNCs it's okay because we have people in the healthcare industry, we have people in the consumer industry and the industrial manufacturing industry, so we don't have too many conflicts. But on the private equity side, we have so around 45 of those are private equity funds. They're all looking. It's actually quite impressive and quite interesting that they're all looking in different deals. You have those who are looking for early venture deals. There are those who look for large buyout deals. You have those who look only for growth capital or consumer, or those who only look for healthcare. So actually right now, we don't have many conflicts. But once we of course now with increasing number of clients, they are looking for more. Some clients are looking for more for the same thing. So now we give them sort of exclusivity. So the first one who acts on an intelligence that we wrote, then they will have an exclusivity for a certain short period of time. But then usually, yeah. So it's yeah, exactly. So it's actually quite I would say it works right now because sometimes there's interest and they are busy on some deals and they are not looking for new deals, and so it really happens like this. So we're also trying to make it work and to understand how we make sure everyone is happy and everyone is getting the information they want.
I feel the barrier to entry on your business is that you have to invest a lot at the beginning in terms of getting a lot of articles. Could you give us an idea of the size of the investment, of how many articles you had to pour into the business, or did you maybe select some verticals, some segments who were strategic? How did you deal with the initial investment? Because I feel that's the biggest barrier to enter.
Yes. Again, I think you don't work in consulting for nothing. It's a very, very good question. We first of all, there's the number of deal leads and there's the quality. So quantity and quality. So if you have thousands of useless deal leads that no investor will be interested in, still it doesn't form a barrier to entry. So it was both quantity and quality. So in terms of actually, I would say quality is even more important because if you know your client, what your client wants, for example, if a middle market buyout fund wants to see facilities management companies, for example, pest control or catering companies or cleaning companies. So those who go to hotels and clean the uniforms, etc. It's very, very niche and specific sort of market, right? So you need to know that these clients, they want this type of assets. So we are actually talking a lot to our clients. It's not only we wake up this morning, are like, okay, I'm going to ask our team to find deals in the automotive sector. No. We actually talked a lot to our clients and listen to what they want. And then when they say, okay, I want to see this sector, I will direct our team to look for deals in those sectors. So it's actually that, anyone who is not a banker or who's never done investment, it's difficult for them to get the right direction on where to find those business leads. So and then of course, the more you have, the more deal leads you have, the easier for you to sell your services. So right now we don't have it's a very, very I wouldn't say easy, but it's the people can see the value straight away because you just go into the platform and they see, wow, you have so many potential deal leads, etc. So that we don't have a problem. But for sure, yeah, for the last 2 years, the first 2 years, you have to work with clients that trust you. So based on relationship, etc. And you cannot go to people who don't know you. So now we have that basis to show our new clients, the value of our intelligence. and now they can see it straight away. And now the barrier is already here, because it's very difficult for another one who come in and say, okay, I can show you 10 per day. You already have them. And Chinese market is only that big. So how many private equity funds you have? The quality ones, you have maybe hundreds. And how many MNCs you have? You have the Fortune 500, and so from that side, we are pretty confident that it's difficult for any new entrants to compete with us.
Yes, because I feel you are in the same industry as marketplaces. You have clients who need to look at your information, and you need to input information. But I feel that you have adjusted a little bit by getting your first clients, and then adjusted the segments to get more information on the segments. And then because you build up on those segments, we're able to get other clients interested in this segment. I see. So you have this growth, which is a bit selective at the beginning, and then extrapolating to other sectors.
Yes.
What about the development? Because you are not a developer, you are not an IT developer.
Yes.
I don't think your partner is an IT developer, neither.
No.
Is there anyone who is from IT in your team? I mean, you're at the very beginning from the funding partners?
From the beginning, to be honest, we were using Excel.
Okay.
Excel.
That's a very good tool.
And Word. Yeah, it's a good tool. But to become a SaaS, you probably need a little bit more than that. So we did use a IT company to build our it's a customized solution. So we have basically a very unique one. I don't think there's any other software like this. It's purely based on the needs of basically private equity investors or M&A departments of MNCs, and it's very easy. They look at the intelligence, and then once they look, they just need to click on it, and they can request on meeting them or having a call or having more information, etc. And they can also do requests for customized search. So, for example, if Daxue is a client, if you're Matthieu, you're a client of mine, and you're saying, okay, I want to look for all the business or potential targets that are in my sector, basically consulting, that are that big, for example, from 10 million to 50 million US dollars, that are only located in Shanghai. So all type of criteria, you give it to me, and we will find those targets for you, and we will clear or qualify the market for you. And it's massive. You will save a lot of time, and it will be almost 90% coverage, because we have all the sources that are out there that are available. I'm not saying that you cannot do it. Our client and yourself can do it yourself as well. You can do it probably as good as us, but it will take for you much longer time. And your people, normally they should be focused on your real business,
core business,
and not core business, and not on looking for targets, etc. So sometimes investment banks, they do that, and they even outsource this job to us when they have clients who wants to buy companies in China or look for targets in China.
I feel that you have segmented the different steps of value creation of investment bankers, and you have found out the sourcing of acquisitions was actually the one you could outsource, and
absolutely,
and that actually you could replace someone in that company actually.
Absolutely.
So you may price, basically you may have thought about pricing based on the salary of someone with
absolutely.
Was it your thinking?
Yeah, absolutely. I think you're spot on here. We are you asked for the price. Our pricing for every client, it depends, of course, on their needs and on their capability to close deals. But I can tell you, I can guarantee you that for him, buying our services is much cheaper than hiring one analyst or one associate or two analysts to do the job. It's much cheaper, and at the same time, one analyst or two analysts, they cannot have the coverage we have, because we have 20 people, and all we do is looking for targets, looking for information, looking for contact, and getting access to them. I see.
Talking about the sponsor, Daxue Consulting, because this podcast is sponsored by Daxue Consulting, given I'm the CEO to disclose everything. So how have you had some time used research for yourself? I mean, done from your fund. Have you used research that help actually to value better the company? In which cases could you give an idea of how research can be useful, or actually if you haven't, you can say you haven't?
Absolutely. I think, for example, we use research basically on a daily basis. For example, if a client asks us to look at everything that is all the potential opportunities, investment opportunities in the pet food area. We will go into the internet,
liking it, but
pet food. So I'm going very specific. Or pet care or something about the pet industry, which is very hot actually right now in China. So we will look for all the research we can on this industry and try to understand, the different segments of the industry, whether it's pet healthcare, veterinary services, whether it's food, whether it's all these different type of niche, and then we will go to find those opportunities according to the research. So basically, we use those research on a daily basis.
Right.
We need to, and otherwise you again it's specialization. It's Adam Smith. It's the invisible hand. You are specialized in your in your business. It takes too much time for us to do the research on our own. So we have to use professional research people and output and then use them to do our own work.
Yeah, I feel with my clients that actually what's lacking most is right information to make the right decisions. And I think we are in a very similar situation with our similar businesses.
Yes.
Situations. Good. The second part of the talk I wanted to have with you is about M&A, valuation, current situation in China. I feel something is happening. NHA didn't pay a loan, I think, of 300 million RMB. Could you tell us a bit more about how do you value companies in China? I mean, do you use the same sources as the West? Do you use same ratios? We can be a bit technical, like WACC and so on. If you could give some directions to the people who are listening to us, it'd be very interesting.
Sure. I work with many private equity funds, so they make investment for a living. So we know how they do valuation. I mean, I used to be an investor myself, working for private equity funds. So I think in China, the main difference in the valuation in China and abroad is that in China, the valuation is typically, relatively speaking, much higher than in the US or in Europe. I think there are a few reasons. Yeah, I think there are a few reasons for that. I think first of all, if you look at the structure of the economy, you have many state-owned companies, and those state-owned companies in China, at the SOEs as we call them, you cannot make investment on them. Obviously, they are state assets. They are managed by the government. So what else do you have? You have the listed companies and the private companies. Those are you can make investment on them. But the listed companies, unfortunately, you only have a few thousand. You have 4,000 A-share listed companies in China, and they are all very young, because if you look at the history, China only has been opened for 40 years to market economy, and those companies are very young, and they are very young, meaning that they are growing very, very fast. And once you grow very fast, the growth is actually a factor of high valuation. So if you're growing very fast, obviously you get a very, very high valuation. And that's one massive, big reason of why Chinese companies are much higher value. And the second reason, I think, is that the Chinese retailers, the Chinese retail investors. So people like me and you and our neighbors, if they have some money, they will put it in the stock market. Usually, in China, they don't have many choice of investment, not in the US. Here, you either buy flat or you put the money into stock market. So a lot of people would just put a lot of money into the stock market, and just they play. It's a very retail oriented market. So also here, once you have the institutional retail putting all their money into the stock market, then obviously the valuation goes up also very it's also very high. So I think it's a lack of investment vehicles or investment options, because the Chinese cannot go abroad and buy US stocks or European stocks. It's purely Chinese stocks. So I think that's also another reason. And secondly, the third reason is the massive amount of liquidity that has been created by the government in the market. So you had the crisis in 2008, 2009, and I think the Chinese government just did a quantitative easing of I don't know how many thousands of millions or billions. I don't even remember. It's a huge amount of money that's been poured into the market, meaning that those markets either they will be invested into infrastructures or machine factories, etc. And some of them, a lot of them actually are directed into real estate, into companies, into a stock market. So all those reasons will basically affect the valuation and make the Chinese companies really highly valued. I believe that it's very overvalued, and I can see on our clients, our private equity clients, they feel that in China, I mean, it's just very difficult to be an investor, a proper investor, professional investor, because you have to be careful with the entry valuation. And if you invest at a very high valuation, I mean, you only can make money when it's even higher at the exit, right? So, and now there's some doubt about if that valuation will come down because of the economy is not as hot as before. So, but yeah, I'm also one of them that who believes that it has to come down at some stage, and it will certainly be sooner than later.
Does it mean? Do you mean it's difficult for professional investors to invest in China because we don't use the same tools like comparable DCF, equity value, and that basically you are more like market oriented? This is a ratio, the P ratio from a stock exchange is very high, and actually it's more comparable than DCF based on cash flows and existing business. That's what you mean by saying it's difficult for professional?
No, I think you're right. I think all the DCF, the comps, the M&A transaction, M&A comps, etc. All those tools to do valuations, it is based on the market. For example, if some companies will want to buy Daxue Consulting, and you are ready to sell it for a certain price, but if you see the market is all your peers, the other consulting companies are valued really highly, so you are very likely to only accept a high price, similar price as your peers. So I think in that way, the market is always influencing the mind of the entrepreneurs. So that's why they have very high expectation in terms of valuation. So that makes the life of professional investors more difficult, especially they don't have access to a lot of leverage in China, because that's another problem, or another issue that we can talk about, because the way to make money on your own investment, there are three different ways. You have the leverage, you have, of course, growing the business, and you have the arbitrage between entry and exit multiple. But here in the US or in the West, a lot of LBO funds, they use leverage to increase their return. But in China, they don't have access to that. But anyway, that's where they're deviating from our subject. But I think the main message is that the entrepreneurs have a very high expectation on their valuation. So they will only change their mindset if the market goes down or the valuation in the market goes down.
I see.
Yeah.
Good. Thank you very much. I think we are close to 40-45 minutes.
Okay. Wow, it's really quick.
Really good. That means you enjoyed it.
Yeah.
Thank you for your time, Peng.
Thank you, Matthieu.
Enjoyed it, and will be published, I guess, in a few weeks. You will see on our channel. Thank you everyone for listening.
Great.
And talk soon.